Joining me with his money-saving tips is CPA and market analyst Dan Geltrude. Thanks for getting up with us this morning, Dan. How are you doing?
Good morning. Well, got to do what you got to do.
You do. And we're going to talk about getting ready for your taxes. So obviously the taxes, they're not due till April, but there are some deadlines in December. Tell us about those.
Well, when we're looking at the end of the year, and we're right there right now, but it's not too late. Listen, tax planning, first and foremost, is about putting off income, deferring income. Why? Because we want to lower our taxable income. So there's some things you could do. First of all, maximize your contributions to your retirement plan, specifically IRAs. You can put in $6,000, or if you're 50 and above, $7,000. Also, if you have a 401k at work, take advantage of that, especially because many employers will match your contribution. We call that a twofer. So you want to take advantage of that. Next, a lot of people in the gig economy getting 1099s. Well, that means you're self-employed. So there are deductions you can take advantage of that you normally wouldn't. Make sure you keep all the support for those types of expenses you're incurring. Next, stock market, a little tough this year. If you have investment losses, you could take advantage of. Why? Because they offset your investment gains. Again, lower that taxable income. Another one, kiddie tax. Your children can earn up to $2,300 of unearned income and not be taxed at the parent's rate. So you want to make sure you manage that. Also, don't forget the required minimum distribution out of your IRAs. Gotta do that. Why? If you don't, there's a 50% tax on what you should have taken out. So big penalty there. And the last thing I want to say is hire a tax professional to help you out. That is not a cost. That's an investment for what they can save you.
You know, and we are around the holidays. Also, I need your energy this morning, Dan. Give me some of that energy for the rest of this show. But it's the holidays. People are giving to charities. Let's talk about that, the taxable income when it comes to donating to charities. How does that work? Do you have to have itemized slips for this? How would somebody go about that?
You definitely want to have all supporting documentation for what you give to charity. However, keep in mind, the last 2 years you were allowed to donate up to $300 in charitable contributions, and you didn't have to itemize. That's changed now. So now, in order to take advantage of those charitable contributions, you must be itemizing your deductions. But listen, it's always good to give to charity, deductible or not.
All right. Dan Geltrude, thank you so much for getting up with us this morning and having so much energy talking about taxes. I love it.
Thank you.
Have a good day.